All right, let's dive into a massive move in the crypto space. While a lot of the market was pretty quiet, one network just exploded. Today, we're going to break down the wild 22% surge for Pi Network.
So get this. On October 27th, Pi Network's price shot up a staggering 22.06% in just 24 hours. A move that's sharp, well, it always gets people talking because it suggests something pretty big is happening right below the surface. This wasn't just a small bump. It was a full-on breakout.
And to really put that surge into perspective, just look at this. The entire crypto market, it grew by a respectable 2.5% that day. But Pi Network, it pulled off nearly 10 times that performance. This wasn't a case of just riding a market wave. It was basically creating its own.
Which, of course, brings us to the big question, what on earth just happened? Was this just some random spike, or were there real, actual forces pushing it? Well, in this explainer, we're going to get into the mechanics behind this rally, piece by piece.
It turns out this really wasn't just one thing. It was more like a perfect storm. 4 totally distinct drivers that all came together at exactly the right time. So let's unpack each one of them and see how this whole thing was built.
Okay, first up, let's talk technicals. For all you traders out there who live and die by the charts, you probably saw the signs. A classic breakout pattern was starting to form, which was a big signal that the downward pressure was finally easing up, and a reversal might be right around the corner.
You had all these technical signals flashing at once. Pi broke above its recent average price, showing some real new strength. Then it formed what's called a falling expanding wedge. That's a pattern traders get really excited about because it often means a bottom is in. And finally, the RSI, which measures market momentum, bounced back from oversold. For chart analysts, these weren't just random data points. This was like a whole chorus of green lights. Now let's move on to our second driver. And this one's a bit of a double-edged sword. A major supply shock. And this is where things get really, really interesting because it points to both long-term confidence and a huge risk coming up.
So leading up to this surge, a massive 10 million Pi tokens were moved off of exchanges and into private storage. Traders see this as a super powerful bullish signal. It basically suggests that the holders are in it for the long haul. They're planning to hodl or hold on for dear life instead of selling anytime soon. And the economics here are pretty simple, right? With a huge chunk of the sellable supply suddenly locked away, even a small increase in buying demand can have a massive impact on the price. Fewer sellers just means buyers have to bid the price up to get what they want.
But, and this is a huge but, here's the twist. While the supply available right now is shrinking, there's a potential tidal wave of new supply just looming on the horizon. See, the network has a whole schedule of token unlocks coming, and the numbers are big.
And this table really shows you the scale of the challenge ahead. I mean, over the next few months, hundreds of millions of previously locked tokens are about to be released. Just look at November, 172 million tokens worth an estimated $35 million could suddenly hit the market. That is a ton of potential selling pressure that buyers are going to have to absorb.
The third driver was really just a case of good timing. Pi Network didn't surge in a vacuum. The entire crypto market was in a really good mood that day, which created this nice, favorable tailwind for pretty much every project out there.
Bitcoin, the market's big leader, pushed up, and Pi has a historically high correlation to it. That just means when Bitcoin moves, Pi tends to follow. And this wasn't happening in isolation. You had other altcoins up too, confirming this broad, positive feeling across the entire market. And finally, our fourth driver. Well, this one comes from inside the house. It's not all just about charts and market sentiment. There were some really fundamental signs of growth and adoption happening within the Pi Network ecosystem itself.
In the week right before the surge, nearly 2.7 million verified users migrated over to the mainnet. Now, that is a powerful metric. It shows a growing, engaged user base that's moving from just tapping a button on their phones to actually becoming active participants on the live network. That's real growth.
So there we have it, our 4 drivers. Now let's see how this whole story plays out in the data, because some of the numbers here are absolutely staggering.
Just look at this chart. The 24-hour trading volume absolutely exploded, from an average of about $8.5 million to nearly $100 million. That's an increase of over 1,000%. This tells us the price wasn't just moving in a vacuum, it was driven by a massive, massive wave of new activity and speculative interest.
So for traders, the game now becomes about watching these key levels. You can think of them like battle lines. The bulls, they want to push past that resistance at 28 cents to try and target 36 cents. Meanwhile, the bears are going to try to break below the support at 25 cents, which could send the price right back down to its stronger base around 20 cents.
All right, now that we've kind of diagnosed the surge, let's look forward. Based on all this data, the analysis points to two competing scenarios for what could happen next. And here they are, side by side. The bullish case, which has about a 60% probability, sees Pi breaking that 28-cent resistance. This could be fueled by new integrations, or if Bitcoin keeps rallying, with a price target way up at 36 cents. The bearish case, at 40%, gets triggered if Pi falls below 25 cents, likely driven by those massive token unlocks or a market-wide correction, and that would target a return to 20 cents, or maybe even lower.
So what does this all boil down to? Well, if you're watching Pi Network, there are a few really critical questions that are probably going to determine which of those two paths it ends up taking.
So it really comes down to three things. First, can the bulls actually punch through that 28-cent ceiling? Second, can this explosive trading volume actually be sustained? That would prove there's enough real market interest. And third, will an upcoming technical integration actually add real value and utility to the network?
And that brings us to our final and maybe the most important question of all. You have these two powerful forces on a collision course, a rapidly growing super engaged community on one side, and a massive wave of new token supply on the other. So the question is, can that fundamental network growth be strong enough to absorb all those new tokens without the price collapsing? The answer to that, well, it will likely define the entire next chapter for Pi Network.